Welcome back to Real Estate Mindset. Today's video is gonna be absolutely bonkers. Now the data is in, and today we're gonna look at another one of Redfin's weekly housing market update. And you guys, things are starting to get really juicy. And remember, when we look at this data, the data is still lagging behind the 7% interest rates and the recession that we're obviously in. But nevertheless, you guys, we're going to dig into some really explosive data just to see if we had any week over week changes that are going to give us new indications of where the housing market is headed. Now, before I continue, please guys, remember this is my personal YouTube channel. For all of my efforts and for my message, please like this video, subscribe if you haven't already, and shoot me a comment below. You guys know that I love hearing from our great community here at Real Estate Mindset. But regardless, you guys, the name of the article today from Redfin is titled Housing Market Update. Economic Woes Exacerbate Slowdown as Rates Reach 20-year high. And real quick, guys, let me point out a couple things, and then we're going to dig into the article, leading indicators, and I'll bring up many charts just to visualize what's going on. But again, to put things in perspective, when we were in the 2008 crisis, the Federal Reserve only tightened 10 to 15 basis points to the federal funds rate. Right now, we're at 75 to 100. So what we're going through right now is something that we've never been through before. And again, the reason it was artificially created from hyper demand from cheap and free money. So obviously, when we take those things away, it's going to come crashing down. And that's why you're seeing the speed at which everything is starting to crumble. And it's historical. We've never had this type of crashing and crumbling so quickly before. But regardless, let's jump into the article and the data right now. So obviously, it always starts out with a little tiny read, you guys, and here's how it goes. The housing market is taking a second hit this month as increasingly economic volatility and persistent inflation pile on top of 6.5% plus mortgage rates to further deter would-be home buyers and sellers. Pending home sales and new listings both posted even bigger annual declines than we saw throughout the summer when buyers and sellers initially reacted to rapidly rising rates. Data on sale prices, which typically lags a couple months behind other demand indicators, is also weaker than it was over the summer when the pandemic home buying boom ended. The share of home listings with a price drop rose to its highest level on record, and the portion of home sales above final list price dropped to its lowest rate since the early days of the pandemic. Prospective home buyers and sellers barely had time to get used to the 5.5% mortgage rates over the summer before they rose to nearly 7% this month. The second sharp rate increase this year, together with nerves about inflation and the direction of the economy, is dragging home sale activity down further than it was over the summer and pushing homebuyer sentiment down near its all-time low. The combination is also unnerving for homeowners who don't want to list their home when demand is weak or give up their own low mortgage rates. And essentially what we're seeing here is the Federal Reserve fight inflation. And essentially what that means is the Federal Reserve is fighting the labor market, and the victim is the housing market. And so long as the unemployment rate remains low and the labor market remains hot, more than likely the Federal Reserve is going to continue quantitative tightening and additional federal fund rate increases. So again, you guys, unfortunately, the biggest victim of that is the housing market, or just depending how you look at it, it is fortunate because you're like me on the sidelines waiting for the buying opportunities of your lifetime. Now, let's take a look at the leading indicators and look at this insane information. Now, I know Redfin is kind of hiding data. I also kind of think they may be tainting it, but big shout out to them because they give us our weekly housing market updates. And really, they have been well ahead of the competition as far as Zillow, CoreLogic, Black Knight. So, of all the big companies, big props to Redfin for continuously giving us this data. Now, online searches are down year over year, 35%. So way less people looking online. Redfin home buyer demand or home buying demand is down a minimum of 25%. So now we're seeing the home buying demand severely impacted in the data. And remember, you guys, all of this is lagging. Now, touring, you guys, touring is down 32%. Essentially, 23 plus 9 is 32%. So touring down massively at 32%. Now, here's what I'm feeling, and I'm actually starting to get super nervous, you guys, because mortgage applications are down a whopping 39%. So unfortunately, in the months to come, we're probably going to see a lot of layoffs in the mortgage industry. I really hope it doesn't happen to me. That will put a damper in my plans. I will be okay, but nevertheless, it's going to put a damper in my plans, and I am getting nervous. Now, here's the list of metro areas with year-over-year decline. So we have Oakland on the list, San Francisco, and New Orleans. So you guys may remember that Oakland, San Jose, and New Orleans was also on this list of year-over-year price declines. But not only that, you guys, so was Honolulu and Buffalo, New York. So a few metro areas have fallen off and gone back on. But again, you guys, as we move on into the year, there's going to be several metro areas that start making the year-over-year price decline list. And not only that, we now have 4 metro areas that are going through a home price crash right now, which I have defined as a minimum. Okay, just a minimum of a 15% price decline from peak. Now, those cities are San Jose, Oakland, Austin, and Hebert, Utah, which I have a hard time pronouncing. And that's down, you guys, 22%. So if you're one of these people that says, oh, we're not going to have a crash unless there's 20%, you guys, we already have a metro area right now that's over 20% from peak in Utah. So there's no hiding the data. These are not seasonal trends. Regardless, let's jump into visualizing some of this data. All right, guys, so I'm going to start with mortgage payments because obviously unaffordability is what's leading all of the trends, and that's severely impacted in mortgage payments. So obviously mortgage payments have started skyrocketing probably the beginning of August. But what I want to point out is this softening right here, you guys. A lot of these people may be trapped in their house for quite some time, because remember, a lot of these people thought that they could refinance into a lower rate. So they also bought at the peak. And here's what I think. I don't think the Federal Reserve, and I hope the Federal Reserve does not bring rates back down to anything close to under 5%. So all of these people right here, guys, during this time frame, which was basically July and August, I'm most worried about these people because they have high rates and they also bought at the peak, and more than likely they're not going to be able to refinance if rates even go that low again. Now, obviously, because so many things are unaffordable, demand, which is this chart right here, has plummeted. And this is Redfin Home Buying Demand Index. Now, 2022 is the red line. You can now see that it kind of went sideways week over week, but it is down 25%. They corrected it from last week. Remember, I think it said 20. It was a mistake last week. But now it's down 25% year over year, which is a lot lower than 2020 and 2021. So another beautiful sign of the direction of the housing market. Obviously, demand is plummeting. And again, you guys, this is lagging behind the 7% interest rates. However, because demand has been devastated continuously, median sales prices appear to finally, once again on a nationwide scale, trending downward. Now, this is the first week of a trend downward in about a month, would you say? So this may be the start of initial median sales price drops that surge. And I'm talking like, more than 1% in certain metro areas month over month, which is a lot. I think maybe even 2%. Maybe even 3% in some metro areas, just depending on the level of crash. But as you can see here, guys, on a week over week basis, it looks like we may be finally forming a trend for additional nationwide average price cuts. Now let's take a look at another chart right here. And for all of the people that are saying it's still seasonal, and I still get comments, Travis, wait till April, what's going on right now is normal. So let's just look at this chart, guys. The red line is 2022, the blue line 2021, gray line is 2020. So, obviously, everything looks normal here, right? Nothing out of the normal. Everything looks seasonal. Obviously, nothing to really talk about here. Do you guys see anything out of the normal? Do you guys see anything out of the normal, perhaps? I don't think we really need to cover this because obviously, you guys, just like all of the realtors are saying, this is just seasonal. These trends are normal, right? But I think it is interesting to point out that 7.9% of listings did have a price drop. This is a leading indicator of the data that we have that is essentially telling us what's going on in the housing market right now. And what's going on in the housing market right now is a price meltdown. And that is what this chart shows. Now, one of my favorite data sets, you guys, is months of supply. The reason I like looking at months of supply is because it gives us a true idea of how much supply we really have in our housing market, because it takes into account demand. And obviously right now supply is outpacing demand. So I really think it's a good idea to keep our eyes on months of supply. Now there was a slight decline week over week. We're now at 2.9 months, you guys. We're still up over 2020 and 2021 this time of year, but the months of supply did go down slightly week over week. But again, you guys, this data is still lagging behind the 7% interest rates and lagging behind any type of confirmation of a recession, even though there are so many economic indicators other than unemployment that are saying otherwise. Now, before I end this video, I want to tell you guys once again, please use the links that I'm providing you guys to search your own local market. And I'm going to show you guys one more time how to do that. All right, so again, I'm going to go from scratch because I want to hear successful stories. I'm going to Google, I'm typing in Redfin. Okay, I'm going to click on Redfin. I'm going to scroll down a little bit to where it says See Housing News. I'm going to click See Housing News. Once I'm here, I can access the data center. All right, so let me access the data center. And you guys, this has some wonderful, wonderful information. It can compare 2022 to 2019, and it has several metro areas. It has month over month and weekly data. It has pending sales, median sales price, inventory, months of supply. It has all of that stuff. So please, you guys, in other words, what I'm trying to say is please self-empower yourself, and please let me know that by providing you these links, they are helping. Now, other than that, you guys, remember, work on the three main things when it comes to loan qualification, which is your income, your credit, and your assets, or how much money you save. So continue to stay encouraged, continue to become an expert in your local housing market, guys. And please, you guys, continue to help me grow the community of real estate mindset. Now, other than that, if you're out there investing in real estate, you know I wish you luck and I hope you win.